Good evening, everybody. This is Michael Filigera. I'm with logicalsignals.com, and this is the Elliott wave update for the NQ on Monday, March 29th, 2021. Not much to be adding right now. We are continuing to trace out a wave 2 correction wave, so it's a bounce higher within an ongoing minor degree third wave, which is again within a little bit larger primary C wave down. So we are eventually expecting lower levels, but the market is just not ready to really roll over that side. And I have a feeling that it's like sometimes I think that there are traders that understand if it starts to really drop, it's just someone's going to pull the plug, but they keep stepping back in and they keep buying. And that just keeps us in this corrective mode. We left off yesterday on the update. I was discussing that I would like to see a new low below 12,807, and that would put in a nice 5 waves down. And then we would have a 3-wave rally up, and then as an ABC, and then we would begin to decline in that 3 of 3 move. We did not get the new low. This ends up being an X wave. And if you remember, I also mentioned last night that if indeed we don't get it, then we have to allow for the possibility that this wave 2 bounce is going to break down into an additional ABC. As of last night's update, I had already shown where it had broken into 2 ABC, so we were considering it a double. But not unusual. We sometimes will get a triple, and that usually comes in a period where the market is just unsure. You know, we're doing this against it. We have the Dow once again plowing higher today, screaming for new all-time highs, taking the S&P with it for part of the ride, kind of getting hung up. The NASDAQ was down, then it was up, then it was down, and then they just came in and they bought it into the close again tonight. But in any case, we need to continue to leave room for the C wave of this third ABC structure to move above today's high, which is 13,003. That was an excellent, excuse me, resistance point. But it looks like we're going to need a little bit more. We have additional Fibonacci resistance. It's not being shown right now. And that's going to be around 13,025. And we're going to raise that zone to 13,038, 40. It's kind of a big zone, but we right now, if this is C, we maybe have 1, 2, we've got a 3 and a 4 and a 5. And so even if I were just to say, that it's going to move the A or the first little wave up is, like $200 plus. And so we need to leave that much room. And so it could really push itself back up towards this level. Again, this is the level it cannot break and remain in the count that we are using. And if that is the case, then we would be looking at our alternate count, which I'm now going to put the Fibonacci retracements on through extensions so that we can see what that additional rally can look like. And we're going to use it from here. Oh, come on. Yep. Run it up to there. And down to this low. A little bit off, but we're going to live with it. So we have the continued resistance here, and then that this particular wave, C, if it's within this one, would be equal to wave A at 13,091. Now, if it got there under this particular count, I would consider it a big failure, but I can continue to say that this second wave finishes there. So by just using some additional this wave relationship to this wave, I can start to get some Fibonacci levels that still fit within the preferred and the alternate count. And if you remember, I had said that if it breaks cleanly above 13,100, so it breaks and it's got some oomph, like it's not stopping, it's just gonna go. Like it kind of had that, but it got up here and it struggled, and then it just went no, boom. And they took it all back. I mean, they dropped it $100, right off that high. And fun to trade, to tell you. It's like there were many opportunities and it was good trading. That I can say about this particular correction. You get into these boxes where they're just churning back and forth between a high and a low in a box. And it's range bound, but it's tradable. And again, that's when your moving averages are going to come into play, and you're going to pay attention to on a short-term chart. And we'll look at that in a minute. But right now, we're going to leave room at least to this level. If it breaks with oomph above that 13,100 level, then we really have to step back and we have to consider that it cannot break above 13,172 and still be counted as a second. Won't happen. And that would be breaking the rules. But we have the alternate count, which would suggest if it breaks this top level, we're at least probably going to get to 13,205, and it's going to be an A, B, A, B, and then a C wave up. Like this was the A, the A's down here, the B's up here, and it's going to be part of a finishing wave up on the left, on an alternate count. And we could, if I have to consider wave C complete down here somewhere, or in fact that this B wave that we're finishing here actually does come down, as if this is the A, this is the B, and we're now doing the C, then that would project to these higher levels. That's the alternate count. And then we're really looking at 13,391. That's still, we're going to remain below the all-time high right, thus far, which is at 13,900. So I don't expect that we're going to go to new highs, but we are participating on being pushed higher simply because there's a lot of the Apple, Intel, Microsoft. These are, Apple's not, but Microsoft and Intel are Dow stocks. And Apple is in the S&P, and Apple, I believe, is also in the Western, maybe, I'm not sure. Big stocks get pushed together. Today, we saw that they all wanted to have FANG. And I know there's an ETF now that are several ETFs that are set up that you go and invest in that, and they turn around and invest in Amazon, Facebook, Google, Netflix, and Uber. So today, Amazon, Facebook, Google, and Netflix were pretty strong. So that propped up the NASDAQ and kept the Dow and the S&P, higher. In any case, we could see these levels. Right now, I'm truly not anticipating. We get these sudden surges, but they're met with equal surges back down. And until, that just is not bullish nor bearish, it's corrective. We're still in this I don't know zone. And as long as we remain in here, we got to trade what's in front of us, and we just put limitations. You can do intraday trading and put limitations on what you're expecting. Like on a 1 minute chart, this is really what I trade off during the day. And why wouldn't you want to catch that? And then when it really goes up, why wouldn't you want to catch that? Et cetera, et cetera. These are right now, this is in Globex, and the market is like a mile wide. So you have to be careful if you want to trade it. But during a regular session, there's plenty of liquidity. It's trading at all prices, and it moves. It moves quite cleanly. Now let's take just a little bit of an inside look here. And we can see these waves. And I'm going to go in again. Now, these are an hourly. This is an hourly chart. This was this morning, right at the opening. Bob boom, all the way down. And then they liked it. And then they liked it. And then it was like, okay, that's over. But nope. This bar, which came at 9:30 Pacific time, was like, wow, where'd this come from? They just ran it for an hour. If we go back and we look at earlier within these time frames, it had up and downs, but still, it just for an hour, it basically just went up. Now, these are tradable moves. We need to trade what's in front of us. We have our moving averages, which really do guide us. And if you can see, this is the 200, the 100, the 50, the 20s kind of farting around up here along with the 8. But they're basically in alignment to go up. The hourly chart, not quite so. I got the 100 below the 200, the 50 above both, the 20 above, and the 8 above. Now, those are all good. Those are in line, but these two are not. So what's it tell us? It's like, well, we can still go flat for a while. They're not pointing really strongly in either direction. Here on the very, very near term, these do move around, but they're usable. They're usable all day long. You can continue to trade on breaks above and below because they can be triggers during the day. They can be triggers for certain algorithms trigger the price. They're going to come in and buy. They're going to come in these programmed buys and sells. So the moving averages can come into play. Most of the time, it's going to be off your 5 minute, but the 1 minute works too. It really does, particularly if you're in a strong move up. You're very near your 8 and your 4 on the 1 minute chart are going to help you a great deal to stay in a trade and to learn to build on it and just hold and work it back and forth. For tomorrow, it's a coin toss. I really would be looking for higher levels, but if we hit them overnight, we're just beginning with the Asian markets now. And Europe is still has their hand with it, and then it gets returned back to the US tomorrow morning. So it's hard to say. We could go up, we could finish this, maybe, or if the market starts to break down from here, it's really going to just throw wrenches into how we want to look at it on a little bit larger scale. So we're going to have to let it continue to play out. So I'm not so hung up on even the 30-minute or the hourly chart. I like to follow them as they start. If they're breaking and they break down, you always want to see what the market reaction is going to be and be able to adjust accordingly. Well, how hard is it breaking through the level? Is it bouncing up off that level, etc.? So I'm looking for higher numbers tomorrow. I would think that we would be up better than we are. If we start to break down, I have to see it on the hourly chart, folks, that it's going to start to break the 200 on the hourly. And that's not so far away. But then I've got, the 50s below the 200. Let me go back to that other chart. Look at, they're all kind of botched up together. And the 200 is on this little bit wide, bigger chart, it's pretty flat. 50 coming up. If it's going to have a continued move up, that 50 is going to go above that the 200. And should that happen, that's another sign. I would take that as a bullish configuration. That the market's likely going to continue to head higher from wherever it is. It might pull back, but it should head higher. That's how you would want to use the hourly. And you got to, focus down and bring it down to the shorter term charts to make sure that you're staying in alignment. So I'm going to leave it there. I'm looking for continuation to the upside, at least probably 13,090 to 13,100. We have numbers that take us above there and still keep a larger decline waiting to begin. It's just going to be a matter of when and from what point. But at this point, even under both counts, ultimately, we are looking for an additional large decline some point in the near future. I wish everybody a really good trading day tomorrow, and the next update will be tomorrow, March the 30th.